struggling to price in the long-term benefits of these vaccines Meg was just describing against the short-term risks of rising COVID cases and shutdowns. Well, joining me with their advice for investors, Neil Hennessy is Chief Investment Officer at Hennessy Funds, and James McDonald is Chief Investment Officer at Hercules Investments. It's great to see you both. Neil, kick us off here. What's your latest thinking on the market?
I think the market's in great shape. I think there's a lot of value out there, Kelly, that still is cheap, that you can buy, you can own. You just have to put things in perspective. You look at the NASDAQ, it's up 33% this year. But because of 6 companies, 6 out of over 3,000 have run the NASDAQ by over 60%. You have Apple, you have Facebook, you have Tesla, you have Microsoft, Google. Those 6 companies ran it all. In reality, instead of being up 33%, it'd only be up 14%. But there's plenty of value still to buy. There's plenty of headroom that seems to come out with headlines, but the market will continue to march higher, although it might be a little volatile in the short term because of the stimulus plan, because of the vaccines that might or might not be there.
Yeah, so Neil, you're betting on Vista Outdoors, Valmont Industries, KB Homes. I mean, the existing home sales report this morning was blockbuster. It was so strong. Does that tell you that this housing market is going to have a tailwind well into next year?
Well, we've spoken about this in the past. I mean, people are moving out of the cities. They're moving out of confines that they're around a lot of people. They're moving to larger homes, Kelly, so that maybe they have a spare bedroom or an office that they can work from home. I don't see that changing in the short term. Then you look at all the outdoor activities. Vista Outdoor, it goes from ammunition to bike helmets to motorcycle helmets to Bushnell for rangefinders on golf courses, because people want to get out of their homes. They want to do things. That's why you're seeing manufactured housing, home sale, RVs and boats. I mean, they're all having record years. And so you look at Vista Outdoor, that most people don't know, but they have 35 different products for people to use on the outside.
Yeah, and at least for now, we do know that's going to be a powerful demand for several months, maybe even well into next year. James, I know you have kind of a very different take on this market, so let's talk about that. You think we're trading down as much as a 10 to 12% correction on the S&P to around 3,200, is that right?
At a minimum. We have to look at things in context, and in this current market, the stock market's valuation reflects a ratio of profits to actual stock market prices that is twice as large as it was at the peak of the dot-com bubble, which means that the spread of the virus, its impact on the economy, the slowdown of profits relative to the rise in the stock market from the stimulus and from the Fed intervention, we've got a valuation here that is simply impossible to sustain. We anticipate a 10 to 12% pullback immediately. We're using vol Q futures to hedge that. Obviously, there are reasons that there are risks in this market. It's not just a valuation story. This market is going to contract. There's stimulus tensions in Congress. There's China regional trade partnership challenges. We anticipate the 4th largest year-end pension selling in history as stocks greatly outperform bonds this year. Weekly jobless claims showed economic recovery stagnating. There was weak October retail sales. We're going to have more lockdowns here, and so the consumer holiday spending is expected to decline by 19% year over year. And then obviously, we don't know when this is going to end. We were just discussing our parents and how we're going to reconnect as a community. My mom came and visited me for the first time this year in 2020, and it was challenging. And this isn't just a human issue, it's a revenue issue. We're going to not see the same amount of business that we anticipated in March. We anticipated a recovery here. You know, California, New York, Massachusetts, Connecticut, they're all closing schools. We're going back into at least a partial lockdown phase, and so there's just no way market prices can stay where they are here.
And so your stock picks you're looking at following a market pullback, as you just outlined, include NextEra Energy, Intuitive Surgical, so a very different portfolio. Neil, do you want to just quickly respond to that as we go?
Well, I'm not going to disagree with James, but the bottom line here is everybody can anticipate that earnings are going to be down because of the lockdown the last 6-8 months. We know that. We know unemployment figures are going to be up a little bit. You know, claims are going to be up, but that's all old news. It's what's going forward. If this lockdown doesn't occur clear across the country after 2 or 3 months and things start to open up, then you're going to see the stock prices catch up to where they should be, which you're talking about the Dow Jones or S&P is about 18 times next year earnings. So it's not overly overvalued. So I'd stay optimistic. I'd stay long for sure.
And I think you guys aptly summed up the tension in the market. We were just talking about short term and long term. You can kind of see the two forces pulling each way. Neil Hennessy and James McDonald, thank you both. We appreciate it today. Talking markets on the exchange. New York City.